Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're going to be talking about break clauses in commercial leases. Now, there's loads of different lease terms. Leases are there to govern how a tenant uses the property, how a landlord can control that, and also what the landlord has to do as well. But break clauses have lots and lots of different implications, not just for the tenant's use of the property, how long they use it for, etc. It has implications for valuation. It has implications for price paid for a property, lots of implications for how you look at properties when you're doing a deal stack. And so I thought it was worth doing a whole podcast on break clauses because they're so far reaching and have so many implications. So let's get going. So what is a break clause in a commercial lease? Well, for those of you who are well au fait with commercial leases, I'm going to slightly teach you to suck eggs for about a minute or two, then I'll go on to some of the implications of this stuff. When a tenant takes a lease, a landlord will grant it for a term. That term might be 20 years, 10 years, 5 years. It could be any length of time at all. Basically, for that time period, however long it is, the tenant must pay the rent, the tenant must repair according to the lease, they must do alterations and they can sublet and alienate and all kinds of things in accordance with the lease. So the lease will govern their term, and they have an obligation. It's contractual during that lease term. Now, obviously, there's a lease term. So let's say, for the sake of argument, that's 5 years. And then there might be a break clause in there. So what the break clause will do will effectively give one or both parties the right to end the lease early. So you would usually see tenant break clauses. Certain types of property in particular have a lot of, it's quite the market norm to have break clauses. Things like retail, leisure, hospitality in particular, especially kind of more secondary retail, small SME owners, for obvious reasons. They don't want to be tied into big long leases if their business is failing, if they're not trading properly, if the rent proves to be unaffordable, if the market changes. It's just protectionist, really. It's just making sure that they have some flexibility so that if their business fails or is struggling or they get into financial difficulty or just that they don't want to run their business anymore, that they can end the lease and they're not contractually tied in. And obviously that's the difference between residential and commercial, is that commercial can be enforced much more stringently than residential, and there aren't all the checks and balances you have to necessarily jump through in the residential world to enforce the lease. So it's really important for a tenant that they understand when they're taking a lease that they have to comply with the lease. They can't just decide not to, because then they'll be taken to court effectively for breach of contract. So a break clause can be inserted, and as I say, that might be for various reasons. It might be that actually a tenant wanted to take a 2-year lease, but the landlord wanted 5 years. So the compromise was, okay, you take a 5-year lease with a 2-year break clause. It might be that that there's something that happens at 2 years or 3 years. It might be there's a rent review or something, and then they can choose to break the lease if they don't like that. There can be lots and lots of different reasons for a break clause. But here's the thing. When a valuer is valuing a lease with a break clause in it, And if that is a tenants only break clause, they will always assume that the tenant will break the lease. So what does that mean? Well, that means that if you have let's just be churlish for the sake of argument, but if you have a 35-year lease with a 5-year break clause, the valuer will assume it's a 5-year lease, because they will always assume that the tenant will break. And you can understand why that is. They have no certainty that at that point that the tenant will carry on. So they have to make an assumption that that lease is shorter. And that obviously has big implications for valuations, because if you have a 35-year lease, that's going to be, I mean, obviously it does depend on the tenant covenant, but that is going to generally be seen as much more valuable by a valuer than a 5-year lease, because you are guaranteed a tenant in that property, you're guaranteed repairs being made, you're guaranteed decoration, you're guaranteed, and most importantly, the rent being paid, hopefully on time and on a regular basis. So if that is kind of, if that falls short, if there's a break clause in there, then obviously that is a very different lease. Now, what I do tend to find is that there's a lot of properties that are marketed where leases have break clauses, where it's not very clear, so that in the particulars that there is actually a break clause. So, for example, you might see a tenancy schedule in them, or they might say, the tenant has a lease for 10 years. It doesn't say that there's a rolling break clause or there's a break clause at year 5. And so, this is why it's really important when you're looking at commercial properties to ask for the lease and to look at the lease, because sometimes you just don't see this stuff. So let's talk about the different types of break clause you can see. So first of all, it's a tenants only break clause. So that means, and I'll talk to you about the kind of how they can operate that in a minute. But a tenants only means that it's only the tenant that's got the right. There's usually notice periods and various conditions they have to comply with to make sure that they can operate that break. It's usually just not unconditional. You can just do it if you want to. There's mutual break clauses. What that means is that the landlord or the tenant can break the lease. Now, obviously, from a tenant's point of view, that starts to become very risky, because, if the landlord can break the lease. So you would usually see landlord break clauses in there if they're in relatively strong positions. It's all about negotiation at the end of the day. If perhaps they want to do a development or some asset management later, if it was kind of there's some other plans that they've got for the property, perhaps maybe it's a short-term let, or perhaps the development plans aren't quite sorted yet. But when the landlord breaks a lease, they have to still go through kind of a process of serving notices like they would at the end of a lease. So it's a little bit more convoluted for a landlord to kind of terminate leases, but there's still the right. So it could be that the tenant's got the right, it could be that the landlord's got the right, it could be that there's a right to end the lease for the tenant on a different date than the landlord. So all this stuff is super important because it will have an implication on valuation. Or there could just be a landlord's break clause. Again, that's usually on a development basis, but it can be for various reasons. Maybe they want to occupy the property themselves, for example. So, sometimes there are landlord's break clauses in the lease. And then the break clauses, there can be one break clause, say in year 3, or there can be multiple break clauses, say year 3, year 5, for example, or there could be rolling break clauses. That's the most extreme type you'll probably see, where, after this date, so you have a term certain of 2 years, and after this date, there is a rolling 6 monthly right to break the lease, or a monthly right to break the lease. And again, there'll be conditions that the tenant has to comply with, but that will definitely not be viewed as particularly satisfactory from a valuation point of view. And
this episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
And so there's all these different types of break clauses you need to be aware of. But the overriding fact, and I'll kind of repeat it again, is that if there is a break clause, which is a tenant's right to break the lease, then as a landlord, you know that your valuer will be valuing, or any valuer will be valuing up to that break clause only. They will not make an assumption that that tenant will carry on unless you can prove otherwise. So if you've got, you can get rid of break clauses in leases by negotiation. You could get a letter from a tenant saying they're not going to operate the lease. Now, obviously, that's got some weight, but they could always go back on that. So there's different degrees of evidence that a valuer is going to want to see to be assured that that break clause isn't going to happen. And an asset management piece is that you could actually try and negotiate with tenants and get rid of break clauses. So why would a tenant give a break clause up? Well, it might be that actually they never had any intention of operating it, and actually, as a landlord, you might bung them a bit of cash, or maybe change some of the lease clauses in return. Maybe they could hand a bit of space back. Maybe they're not using the uppers of a property and they could hand that back, and in return they'll get rid of the break clause. So statutorily, you can't just unilaterally get rid of it as a landlord or a tenant, but you could negotiate with. And again, it's the normal type of negotiating, find out what the tenant wants, find out where the landlord's position is, and then see where you can meet in the middle. So before you buy a property, it's always really important to understand where the tenant's at, speak to the tenant, find out how they're trading, understand whether they've done any fit out. So for example, a client of mine bought a relatively large office building where there was a break clause about 3 or 4 months after they bought it. Now, he paid a pretty expensive price for this in auction, but he'd spoken to the tenant, and the tenant had literally just spent multiple tens of thousands on the property, putting some extra fit out in there and making it look great. And so the likelihood of them breaking the lease potentially is pretty low in that scenario because they've just invested very heavily in it. So that can be a really surefire sign that they're not going to operate the break. Equally, if you're letting to a tenant which has to kind of by nature of its business have lots of fit out. So for example, a restaurant which has got to fit out its kitchens, then it might be that actually once they've spent, unless the landlord's paid for it, once they've spent, tens, hundreds of thousands on that, the likelihood of them operating a break clause is actually very, very low. So all of the information around a break clause is really interesting. But the most important thing is to speak to the tenants, understand the tenant's business, go and view the property, understand what, where they are, whether they've spent any money on the property. And then you can really start to understand kind of what the state of play is on the break clause. And as I said earlier, there's usually conditions upon which a tenant has to can break the lease. So, for example, they have to give a certain notice period. So that might be 3 months, 6 months, obviously a rolling break. They might just need to kind of serve a notice whenever they want to break the lease clause, but break the lease rather. But when they have a set break date, so there's one break date in the lease, they might have to give 6 months notice or 3 months notice. And it's really important from a tenant's perspective that notice is served properly. So they should always serve that through a solicitor, for example, because if it's not served correctly, as a landlord, you can say, well, actually that notice wasn't served properly. So the onus is very much on the tenant to make sure that they're complying with the terms of that break clause. Also, there's usually clauses in a lease which say that the rent must be paid up to date, so there must be no rent arrears. Now, this isn't in every lease, but it's in a lot of leases, and that the property has to be in a good state of repair. So they can't just run the property into the ground, break the lease, and then kind of say, and then just leave. Otherwise there's some comeback. They can't operate the break in that situation. So there's a lot of the devil is in the detail on some of these clauses. And as a landlord, you may want to stop break clauses if you feel they haven't complied with it. Now, I think there's a bigger issue with that, because if a tenant really wants to leave a property and has done something to break the lease, but actually hasn't quite done it properly, that probably gives you an indication they don't want to trade there long term. So are you going to allow them just to be tied in? Because at the end of the day, you might have the right to do that. Or are you going to work in partnership with them to maybe manage an exit, do a back-to-back letting, bring a tenant in? And obviously that's your call. That's very much down to the scenario you're facing, horses for courses. But that's just something to think about when you're kind of looking at some of this stuff. So let's have a little talk about valuation and the implications on price of break clauses. So when like I said earlier, when a valuer is looking at a commercial property and say there's a 10-year lease and there's a break clause in year 3, just for the sake of argument, they will assume that tenant will break the lease in year 3, and therefore they won't have a lease past year 3. So it's a 3-year lease to all intents and purposes. Now, it does depend on that market and the comparables, but as a general rule, a 3-year lease is worth less than a 10-year lease. It'll also potentially mean, because commercial lenders at the moment are generally looking at, some lenders are different, like Atom Bank at the moment, they're tending to now lean a bit more favourably into market value valuations, but a lot of commercial lenders are looking at vacant possession basis for valuation if a lease is 5 years or less than 5 years, and not to a blue chip tenant. So if you've got a 10-year lease, even to a blue chip tenant, but there's a break at year 3, there is a potential that the lender will say to their valuer, well, actually, because there's this break, we assume it's a 3-year lease, and therefore, actually, I'm not going to lend on market value basis. I'm going to let on vacant possession. Now, the difference between the two can be quite large, because market value basically values the lease that's in place. It assumes that there's a tenant in there paying the rent on the existing lease terms. A vacant possession value assumes the property is vacant. So it assumes bricks and mortar. Practically what they'll do is they'll assume that the property's vacant. They'll work out how long it'll take to let, be that 6 months, 9 months, 12 months, however long it might be. And then they'll basically deduct that off the rent. So they'll do something called a term and reversion valuation, which is where they'll value the term up until the break. Then they'll assume that it's vacant. And then they'll kind of make assumptions on how long it'll take to relet. So potentially a very different type of lending you might get if there's a break clause. So it's really important that you speak to a broker really early on, armed with your lease. Brokers can read leases, lenders read leases. Like, it's one of the first documents they turn to as lenders. Actually, having spoken to lenders direct, they're very, very interested in leases for obvious reasons, because it governs the value effectively of a commercial property, because we value commercial property as a multiplier. We apply a yield to the rent. So, it's really important. And the risk of a vacant property, risk of a break, will be also reflected in a yield. So this yield, the all risk yield we call it, which is basically applied to the rent to get to the commercial property valuation. We call it the all risk yield because it's a bundle of all the yields that are applied to the property, be that the market, the sector, the location, the tenant, the lease terms. A break clause is more risky. So a shorter lease, therefore, is more risky than a longer lease. So that risk will be reflected in the yield. So if that property, just for sake of argument, if the property occupied would be 8% yield, on a 10-year lease, a property that is assumed to be vacant potentially might have a 8.75% yield or 9% yield, just plucking numbers out the air. So it makes a substantial difference to the valuation. So what can you as the investor do about this? Well, the first thing is don't overpay. So one of the first documents I ask for is the lease, so I can see if this 10-year lease that they're talking about in the marketing particulars is actually real, or are there any break clauses. Don't be surprised, by the way, if agents haven't even looked at the lease. Very often I ask for the lease and they're like, oh, I can't get hold of it. And it's like, well, you're marketing this property and you haven't seen the lease, so how do you know what it says effectively? So don't be surprised if that happens, but you must ask for the lease early on. And then obviously you will take a view on that. Then speak to your broker, find out what the basis of lending will be. Even if you're buying cash, I would strongly recommend you get a valuation done as if from a bank valuer, from somebody on the VAS panel, somebody who acts for banks. And basically, because if you ever do want to get commercial finance, there's no point getting a valuation done on any other basis other than the way that you're going to be able to get finance. And you need to make sure that you really understand that, and you understand the basis of valuation, and ultimately you don't overpay for the property if you think there's a 10-year lease, but actually there's a very short lease. And obviously get that lease over to your solicitors as early as you can to make sure that they look at it and they tell you about any other lease clause that might be a bit shaky or might be beneficial or detrimental to you. And don't overpay ultimately for the property, because if the agent is marketing it assuming there's a 10-year lease and there's a break at year 3, but they've not even seen the lease, then ultimately the asking price is just going to be probably too high. So just make sure that you don't overpay. And then yes, make sure you get a valuation done. And you can put special assumptions in valuations, so assuming you extend the lease or whatever else. And then just the last rule really is make sure you speak to the tenants, like I said earlier. Make sure you speak to the tenants, find out, go and look at the property, meet them, find out how business is, find out if they're happy. You won't always get 100% the truth. Whenever I used to do rent reviews back in the day, and I used to start talking to tenants, it was always their worst performing property in their portfolio when you were in this kind of opposite parties in a relationship where you're against each other in a rent review. It's amazing how suddenly it becomes their worst property. It's not always the truth, but you just need to understand kind of how they're trading. Look in the staff room in retail. You can quite often see rankings of brands, etc. And it's really real golden rule to speak to a tenant before you buy the property, and build a relationship with them. So break clauses, very well worn. You'll see them in more in certain types of asset class than others. So you're going to see them more in properties where the balance of power in negotiations is more in favour of the tenant. So secondary retail, leisure, hospitality, but you will see them in a lot of leases, offices, industrial, etc., because they're getting more and more common. But just make sure that you really understand what the lease says, how long the lease actually is if there's a tenant break clause, and make sure you understand the valuation and ultimately the price you're going to pay for that property, that make sure that they reflect it. And if you're buying a property with a lease in place, then make sure you understand what the tenant has to do to be able to operate break clauses. And if you've got a landlord's break clause in there, then obviously you need to make sure that you're complying with the conditions in the lease, if indeed you do want to operate the break clause. So as with all lease terms, nothing to be afraid of, but you just need to have an understanding of this stuff to make sure that you understand it. So I look forward to seeing you next time on the Commercial Property Podcast.